What is going on, investors? Hopefully you guys are having a great day out there. Happy Friday. That is right. That means it is time for our FAANG stock recap show, where we recap all the FAANG stocks, including Microsoft and Tesla. We'll talk about all the news of the week, and then we jump over to the stock charts and take a look at the price action. Obviously, this was a very busy week for this group because we had earnings for every single one of these stocks except for Netflix, which reported earnings last week. So I won't be going into the numbers. I posted videos on all these stocks. I'll try to include links to those into the description below. If you happen to miss any of those and you want further details, I did 15, 20, close to 30-minute videos on each one of these stocks. So if you want to see the revenues, the profits, my commentary on that, I strongly consider subscribing to the channel. Excuse me for only having a t-shirt on, okay? These guys that do YouTube videos, it looks like they're in their mom's basement and they got hoodies on and they look like they just graduated from high school. Not saying that's a bad thing, but I try to look nice on this, okay? It was jogathon day at my son's school, so I got my jogging attire on. I do have a nice watch on, though. Okay, I wouldn't take investing advice from somebody with just a t-shirt on, but if they've got a really nice watch, then I'll let it pass. So whatever that's worth. Let's kick things off right now with Facebook. Started the week at $302. End of the week, this stock has been rocketing up, okay? End of the week at 325. When we get over the stock chart, boy, this one just has been on a rocket launcher. Now, all these stocks, I think almost all these stocks pulled back, outside of Tesla, I think today, pulled back. But again, if you've been following this channel with any regularity, these stocks for the last few weeks have just been on an elevator shaft upwards. My guess is that everybody that's long these stocks, everybody's made so much money, they decided to go on the boat or the cabin or just take a vacation take an early Friday off, because the selling kind of stepped in as we approached the close today. So I wouldn't really put too much credence on that. When we get over the stock chart, we'll talk about levels that we're looking for with all of these stocks. Now, Facebook earlier this week jumped 5% among the ad recovery and drives a blowout earnings quarter. Take a look. Total revenue went up, just 48%. It's hard to say this with like a straight face. 48%. A mega cap company grew their revenue of 48% over the last week. They are now running at $26 billion per quarter, so probably $100 billion for Facebook. Look, outside of earnings, not a lot of news with Facebook. When we get over the stock chart, we'll talk more about that. Now, Apple started the week at 134. Slid sideways and kind of down to 131. So Apple's earnings were very, very good. And the big thing from the earnings is they increased their dividend 7% to 22 cents per share. And they boosted the buyback by just, is that 90 million? No, let me rinse my glasses off. 90 billion $90 buyback. Okay. Almost every company in the world is not worth anywhere close to 90 billion. Okay, when we're talking about the top companies in the stock market, some of them are worth close to 90 billion. Apple's going to do a buyback for $90 billion. So as Apple shares slide or potentially go down, guess who's going to be in there buying these things? Do I want to be on the other side of that trade? I tell you what, if you short Apple with a $90 billion buyback, not only top of that, you got 7% dividend or a 7% raise on the dividend that you'd have to pay that as well, being short their shares. I don't know. I kind of like Apple stock, as you probably would realize. Now, shipments of Apple's mini LED iPad slipped to July. We're going to see this, okay? Obviously, Apple touched on it a little bit on the conference call. They are not having as much chip problems as some of their other competitors and maybe partners in the industry are having, but it will probably catch up with Apple. And if it stretches out into the summer and into late summer, early fall, people might start to wonder, well, what about the next generation iPhone? Which I'm sure Apple is working on very diligently to make sure a chip shortage doesn't affect that release. But these types of things might tamper down earnings just a little bit We'll see what happens, though. It is something definitely worth watching. Now, the other thing that is watching Apple are these watchdogs accusing Apple of antitrust action against music rivals. A lot of this revolves around this App Store, okay? And Apple, when they reported their service revenue is really good, a lot of that obviously comes from the App Store. And so I just think over the next, I'm like a broken record. Every time I get on this show and we're talking about litigation or regulation on these stocks, whether it's from the EU or here in the United States, it's just going to be a permanent structure of these companies until they deal with it. Okay, they have lawyers on payroll, and it doesn't, that obviously didn't impact their earnings. So they're going to fight this stuff tooth and nail. But I think at some point it comes to a head. Okay, we'll see what happens with these app stores, if they're forced to maybe have less anti-competitive nature to them, if they have to lessen the amount they take. Apple, as you know, probably takes about 30% from every dollar that flows through the App Store. Apple takes about 30% of that. We'll see if changes will need to be made there. Now, on to Amazon. Start of the week at 3,346. Ended the week up about $100 to 34.67. It was a little higher than that. It was up at 35.50 earlier in the week. We had stock split speculation. Stock split speculation. That is not easy to say, especially on a Friday, but that did not materialize. But what did materialize is absolutely fantastic earnings from Amazon. And I don't think it was just that. Okay, they grew their earnings by just 43% over actually a quarter that was tough to comp. Now, I think what has this stock and investors very excited, not the stock split, which is not happening at least right now, but the second quarter guidance came in with predicting 24 to 30% growth over the second quarter of last year, which was basically like Christmas. Okay, everybody was sitting at home last year, with the stores were closed unless you were a big box retailer or something, or quote unquote essential. Everybody was ordering stuff on Amazon. So to be able to grow that this year in this quarter, particularly impressive when it comes to Amazon. Now, Amazon is raising pay for more than 500,000 U.S. workers by 50 cents to $3 per hour. I think here's broadly, okay, this is cool. If you work for Amazon, you get 50 cents to $3 per hour. This is going to impact people's lives, because I can't imagine, even if you're making $15 an hour, which is like the starting wage at Amazon, that's really, really, you're paying all your bills with that. So a little bit of a raise, up to $3 per hour is significant for these types of workers. But here's broadly how I'm thinking about this, and what we talked about with Apple with these, watchdog stuff, is these companies, if they're smart, they'll start to get out in front of this stuff. Okay, and this is what I kind of see with Amazon. There was obviously that union vote that failed. I think it was in Alabama. There's been a lot of pressure on Amazon from different political parties and things like that they need to treat their workers better, blah, blah, blah. All that stuff is out there, okay? Now, I think these companies would be smart if they kind of take a little bit of a proactive approach and say, hey, here's what we're doing for our workers. We're giving them raises. We already have an outstanding $15 per hour, which is greater than pretty much anybody in the industry, especially out here in California. $15 an hour is nothing very special and not unique. But other parts of the United States, $15 an hour, pretty good wage, probably, especially if you're a young kid. It's just kind of an entry-level job for you. That'd actually be a pretty good wage. The other thing this does for Amazon is it squeezes the neck of their competitors, okay? Competitors like Walmart, competitors like Target. If they're having trouble hiring because Amazon is paying at minimum $15 an hour plus maybe another 50 cents to $3 per hour, well, guess what? Would you rather go work at Walmart for less money, or would you rather go work at Amazon? So it makes it tougher for Amazon's competitor as well. It's a little twofold game that they're playing. I think they're getting out in front of kind of the negative news about kind of the unions. Amazon, quote unquote, treats employees bad, and they get a little bit of positive news, but they also squeeze the necks of their competitors just a little bit here, and it doesn't really cost them that much. Now, moving on to Netflix, which reported earnings last week, recovered a little bit because we started the week at 504 on this one, ended the week at 513. Loop Capital sees 28% upside in Netflix as the content schedule evens out. Now, here's the deal with Netflix. So they came in this was last week. They reported earnings, and nobody really cared about the earnings, okay, believe it or not. What they cared about was these net additions to global paid subscribers. It came in at 4 million. They previously guided to 6 million, and analysts, the consensus was 6.29 million. So they were 2 million subscribers under where people thought they would be. And they are guiding to only 1 million ads. Okay, 3/4 less than where they were at just now. They guided to only 1 million subscriber ads in Q3. But Loop Capital says, look, they've got new content rolling out. There was a little bit of a delay in that. So they start rolling out this new content that new subscribers will come on board. We'll see what happens. In my opinion, I think this will impact churn. You get more new content on that. The people that have already subscribed to Netflix will just happen to keep it. But how many more people in North America need a Netflix subscription? Like, seriously, like, how many more? Is it, we're not talking about tens and hundreds of millions of people. It's simply not going to happen. They're going to have growth in other areas with Netflix. Advertising model like Roku, some other forms of making money, maybe licensing the content to other streaming providers, or the third option, just simply raise the price, okay? Because the customers that you have now could potentially be willing to pay a couple dollars more. That would impact the bottom line very much over at Netflix. Now, moving on to Google. Just look up in the sky. What do you see up there? I see Google's stock chart. This stock has been on fire. Okay, started the week at 2,300, ended the week at 2,353. Year to date, though, this thing's up 36%. Over the last year, 78%. I mean, we could stretch this out, and it just goes up and up and up. But more specifically, this thing just is like a staircase. When we get over the stock chart, you guys know what's going on with this one. Now, Alphabet jumped 4% after revenue vaults 34%. Hello. Facebook, I think, was at 48%. Amazon was in the mid 40s. I don't think Apple was quite that strong, but 34% for a company this company is well over 20 years old now. Okay. Their product is relatively mature, and they're still growing 34%. It's just absolutely fantastic. Now, what's interesting, though, is Roku fell after reporting moving YouTube TV. Some of you might be watching that right now from the channel store. So Roku had to pull it because Google wanted like a special search feature. They wanted kind of like preferential search results. So it's interesting. Like Google with YouTube is in a powerful position because look what YouTube did. YouTube was like, nope, you can't put YouTube on Roku. And it wasn't Google stock that got hurt. It was Roku's. Okay. And so that puts Google in a powerful bargaining position. They want YouTube results to show up higher than competitors or other results out there. We'll see what happens if this type of negotiation has any impact on Roku or the streaming business in general. We'll see what happens there. Now, moving on to Microsoft. This one had the probably largest drop out of all of these outside of Netflix reported last week. Started the week at $261, slid down about $9 to $252. I don't think that math was right, but I think you guys will forgive me. Microsoft shares slide after inline Azure growth offsets strongest revenue since 2018. So out of all of these stocks, minus Netflix, which reported last week, 19% growth was, I believe, the lowest. Okay. Now, Microsoft's been around for what, like 30 years? Okay. So a lot of their products are super mature as well. And I think this Azure growth, it was where I would expect. Okay. It was in the 50% range. I think that's about where Google's cloud product was. Amazon was mid 30s in terms of AWS growth. cloud is just becoming, I don't want to say it's saturated, but the growth, the mega triple digit growth days are over with the cloud stocks in my opinion. So while there's still 50% growth is fantastic year over year, I think these numbers will start to taper into the 40s, the 30s. We'll see everybody kind of in that Amazon basket where they're in that, mid 30s, maybe 40% growth rate on that one. So as Microsoft pulls back, we'll talk about when we go over to the stock chart, is there a buying opportunity? Now, here's another example of one of these companies kind of getting out in front of maybe legislation, regulation, that type of things. Microsoft cut their online store fees for developers from 30% down to 12%. So we talked about how Apple's at this 30%. I think Google with their app store is in a similar range. Well, Microsoft's now 12%. And so if you were a game developer, would you really be excited about, paying a 30% fee or a 12% fee? Okay. And so it could be, Microsoft is kind of playing this like, they're playing the good guy, in my opinion. Okay. I've seen them do this a few times over the last few weeks where they, Apple does something that's anti-competitive, or Amazon or one of these other, Google does something, and Microsoft kind of comes in there and says, oh no, look what we're doing. And so I think that's kind of what Microsoft is doing here. But I think in the long run, this is a nice play. Okay. If you're a game developer and you have to make money developing these games, well, obviously paying 12% versus 30% is far better. Now, speaking of better, if I had a Tesla, I'd probably be having a really good day right now. 744 on Tesla, started the week. End of the week at 709. So this one slid back a little bit. In fact, it was a little bit deeper pullback earlier in the week. Now, Tesla cruised past their Q1 expectations on a Monday, and they pointed to this Gigafactory momentum. Now, Tesla's results were pretty well telegraphed. We knew how many vehicles they had delivered because they kind of report this. You can back your way into those numbers. Now, automotive gross margins came in at 26.5%. There was a 24.3% consensus on that, and they were at 25.5% a year ago. So for me, here's the deal with Tesla. Okay, they're a pretty mature EV maker. 26.5% is really, really solid margins. I'd be curious to see how much higher that can get. I don't think we've got more than 2 or 3 basis points where we can get higher than that, but I could be wrong. Okay. The other thing that you can think about is there's Li Auto, there's NIO, there's all these other EV stocks out there. If Tesla's going to earn 26% on their gross margin selling their car, well, you better believe these other car makers, even like a Ford or GM, is going to be in this range. I doubt anybody's going to be able to get over this, okay, especially on the public company side. So is the margin, if the best days of the margin is over, now what's going to happen? Where's that next leg going to happen? In my opinion, it's a cheaper car with Tesla. We'll see if they're able to put one on the road here even sooner than people think. Now, Tesla this is interesting. So Tesla had a paper gain of nearly $1 billion of Bitcoin holdings. Here's the deal. And I actually got a question answered on my channel a few weeks ago about this, and I didn't know the answer to it. So Bitcoin was roughly 59,000 on March 31st. So Tesla purchased $1.5 billion worth of Bitcoin in the first quarter. So they are recognizing that on their financials right now as 1.33 billion, because I think they sold like 200 million of it or something like that. But so on their financial documents, they're carrying a value of that at 1.33 billion. But the fair market at the time is $2.48 billion. So obviously Tesla has more than $1 billion in gains, which is way more than they've made selling anything. Okay. $1 billion is a ton of profit when you're talking about any of these companies, but especially Tesla. Okay. Because, it's just where they are as a company. They're not as mature as a Microsoft or an Apple or even an Amazon in terms of making profits. So this is interesting. The SEC is going to have to step in here because, look, having a $1 billion profit that's not recognized on your financial, that's fine. That's kind of icing on the cake. But what if this was reversed? They had a $1 billion or $2 billion or $3 billion loss on their Bitcoin. Then as an investor, It makes it much harder to analyze these companies. So we'll see what happens there. But for right now, Bitcoin is bringing in the dough for Tesla. Now, moving over to the stock charts. Tell you what, these stocks, I think what happened is they pulled forward a ton of this good news that happened with earnings. Whether or not it was insiders kind of knowing this stuff or predicting it or whatever it was, some of that could be true. Now, Facebook did gap up when it reported their earnings, and now we're kind of up here. I want to shift the graph here just to give you a better view. We're all the way up here. Okay, we're in rarefied air. Now, can this start doing what Google does, and kind of what Google's been doing for like several months now is gapping up like this, trading sideways for about 2 weeks, and then gapping up again. We'll see if Facebook's able to pull that off. Not exactly sure if they'll be able to do that. But if they do that, look, right now is probably a buying opportunity. Now, in the more sensible analysis of that, you get a pullback in here, you fill this gap, you've got an area here at 316. I'm not necessarily going to run in there and buy a stock like this when you've had just a monster move on this. This thing was down here in the 250s and now we're up here in the 320s. I'll let it take a breath, okay? Consolidate sideways. I think that would be healthy for Facebook. Now, Apple's done something completely different, okay? Apple had a nice move. We were down here at 120. We came up here to 134 and we have stalled, okay? This is like a Tesla that is basically out of battery, okay? You're sitting at the supercharger waiting for this thing to kind of come back to life, okay? It has stalled for several weeks now, really since the beginning of the month. We've been stuck between 132 and 134, 135 on this one. I mean, it is a very, very tight range. Buyers have kind of dried up to a certain degree, but so have the sellers. This stock is just hanging out here. Okay, we do see some overhead resistance here at 137 or so. You could probably drop this down just a little bit, probably put it at 137 and a half or so. I try to round these numbers up so some of you guys listen to this almost like a podcast, so it's a little easier for you to understand when we use round numbers. So right here with Apple, I tell you what, it's a consolidation area. Which way is it going to break? That's kind of what I'm wondering. Okay, can we break above 137 on some volume and then retest these 144, 145 area? Okay, because these are our all-time highs. We just have not been able to do it. If this stock starts to pull back, the first spot is probably about 129 where I'd get really excited about this one. We do have this moving average sitting right underneath it. And guess what? It is turning positive. It will act as kind of like a pillow underneath a baby. And guess what also will act as a pillow underneath a baby? Oh, just a $90 billion buyback. Okay. And so when Apple shares, if Apple shares start to dip, these are ones I'd probably be interested in getting behind because, like I said, Apple has $90 more billion that they throw at this buyback. This stock could react very nicely to that. Now, moving on to Amazon. Interesting stuff with Amazon. Okay, so we were down here at 3,000. Then, just like Facebook, we made a monster leg up, and right before earnings, we were at we'll call it 3,555 with Amazon, $3,555. Then there was no split, but it was good numbers. The stock reacted kind of nicely initially and pulled back. Here's what I think we might do with Amazon is for months, okay, since September up until maybe about a month ago, we traded essentially between 3,100 and 3,300 with this one. Now, there was some deviation. The stock would either pop up or pop down, but it was usually only for a day or two. Now, I think what we could be doing with Amazon is now 3,300, which was kind of our previous top to our consolidation pattern. I think that might be the bottom, and the top here is 3,555. That is what I think could happen. We could hit our head on 35 and start working our way down to here to 3,300. If you want to catch this stock down in here in 3,300, certainly, definitely would not blame you. Okay. Now, if we can pop above 3,500, look, everything is blue skies above that. This thing could get to 38, 37, 38, 3,900 as fast as any other stock. We've got this moving average turning sideways. Volume is still nice in this stock, okay? We are seeing nice volume in this. It's come down compared to where it was at the start of the consolidation pattern, but I think we could wave out with Amazon. I think that would be bullish, in my opinion, for the stock. Now, Netflix, okay, this one consolidated nicely after we had this nice gap down. Now this moving average, we're just sitting right on top of it, hitting our head on it right here at 510. There's a little bit of support underneath the stock right at, we'll call it 495. So this is an area where if you like Netflix, you believe in what Loop Capital says, that they've already kind of forecast to investors, look, we're not going to be growing as fast as we once were. Well, maybe we can start turning things around. Okay, we can get some consolidation area. This stock has consolidated in this area from 495 really all the way up here to 565 for several months now. Okay, really since the beginning of the year. And who's to say we're just kind of taking a breath down here and we'll start a new leg up. That is potentially with Netflix. I'd want to see a break above 521, which is about $8 more, $7 more when the stock is. I think you get a break above there, then you're probably 540s, 550s, maybe even back up to the 570s on this one. Now, Google. This thing just looks like a staircase to me. And who's to say that that is going to, look, that's the trend until it's not the trend with Google. So honestly, if you think that's going to continue to be the trend, we'll probably consolidate here between 34.50 and we'll call it 24.25. We'll consolidate in this area for about 3 weeks, and then we'll gap up to 2,500 on this one. Okay. I mean, that's what's been happening. I don't know if that is going to continue to happen if you get any reversal in this one. Okay. You've got all these sideways consolidation areas where buyers should step in with this one. And with the momentum behind Google's businesses, particularly YouTube and the cloud, I think it could be a fairly decent buy the dip opportunity. If you get that opportunity, if you don't want to play the buy the dip game, look, play the sideways consolidation with that thing. Because like I said, chances are it will gap up next week. Now, Microsoft really gapped down and is really broke trend. I mean, this one did what certainly Facebook could have done. Amazon could have done this. So we were on kind of this straight line up with this stock. Okay, it was down here at the 230s. It got up to 260s right before earnings. And the other stocks kind of went sideways like Apple or kind of just hung out there like Facebook and Amazon did. This one broke this trend, gapped below it, and now we're here and we're chilling out. We just filled this gap here and we're sitting here right at 250, 252 with this one. Wouldn't surprise me if we've kind of gotten a new area of sideways consolidation with this one as well. Okay. Now, the FAANG stocks, they don't just always go up. Okay. So I would expect potentially now we sideways consolidate between 246 and we'll call it 256. A pullback to 246, that's what you're betting on, okay? You're betting that you get a bounce here at 246, you come back, walk your way back up here to 256. Maybe you get some acquisition news, maybe you get some positive momentum in the stock, and you can resume like an upward trend on this one. But the upward trend has been broken on this one. I'm waiting for a pullback. You might get a shot here at 250, 246. If it breaks 246, because look, these candles aren't very thick in here, okay? And if it breaks down, you've got a spot here at 240, 230 to 240 would be a lovely place, okay, to get this one. So I'm actually hopeful this one is broken trend, will fall out of favor. Maybe we get a broader market pullback. This is the one FAANG stock that I really need to buy. I don't really need to, but I really would like to buy more shares of Microsoft since I actually have considerable amounts of shares of the rest of these. Now, one I don't have considerable amounts of shares of is Tesla. I got a bunch of lines on here. I don't want you guys to get confused by this. I don't want you to think I put them in here at random either. There is kind of a method behind this, but you probably don't need this many lines. Okay, you probably can take some of these off, but I get comfortable with this type of thing. Now, what I want to show you here is this uptrend that we are in an uptrend with this one, and it is, it's kind of like, it's like a bouncing ball going up some staircase. staircase, and we're kind of like at the lower point here. So if this uptrend continues, I'd anticipate this stock very soon to be in the 740s, back up to 740 to 780. And that's kind of what we're waiting for with Tesla, is a break above 780 to retest these highs up here, 840, 850, 860, back up to 900 with this one. If we cannot break 780 and we break below, I think about 660 on this one, so right about here, you break below 660 on Tesla, well, you've broken this uptrend, and then you are coming lower, and that could create buying opportunities, in my opinion. So you either play the momentum on this one, and you kind of, maybe you put a stop loss. Okay, you come in here on Monday at 709, 710, maybe it drops a little bit pre-market, you get it at 700, you put your stop loss at 660, and you got 40 in downside, and you're trying to play the rally back up over to 780. So that's potentially how you could play this one if you want to go long this stock. I think just accumulate it slowly over time. And right now we're in a smaller term uptrend, and things look pretty good, in my opinion, on this chart for Tesla. Is it going to rocket up to the moon overnight? Probably not, but things are looking good with Tesla. So hopefully you guys are looking good, because it is Friday. The weekend is coming. I've got a lot of family stuff this weekend, so I don't exactly know how many videos I'm going to be able to put out this weekend, but we'll be back next week with lots more earnings, lots more companies ready to report. Some of them actually more entertaining than even the FAANG stocks. It's some micro-cap companies. It's companies that are not as well covered as these stocks, so I look forward to bringing those videos to you in the coming weeks ahead. Hopefully you guys have a great weekend. We'll be back again soon with more videos. Good luck with your investments.